Hey everyone, I'm Todd C. Slater, the Simple Investor, and I thought I would give you this week's real estate update. So once again, the government wants to get involved in your real estate transaction. Yep, they're turning around and looking at the stress test, and they are thinking that they're going to push the qualification rate higher. In fact, the number comes out at 5.25%. And the reason why they're doing this is they're going to try to artificially cool the market by making people qualify at a higher rate. So what does this mean to you? Well, in 2018, the stress test was put into place and everybody had to qualify about 2% over the post. And when we took a look at the numbers, today the stress test still would be around 4.25, 4.35 in that range. And even though you can get a mortgage right now in between 1.5 and 2%. So the government wants to cool this market. And a lot of people have been calling on the government to do it. So the lenders, pretty much like to gang up. And right now we're looking at increasing the stress test, so it makes it harder to qualify. But the thing is that this is only on uninsured mortgages. So the people that have actually saved up the money, we call them conventional mortgages, which means they put more than 20% down. The government wants to interfere with those, and they're not putting the extra stress test on the government-insured mortgages, which is the CMHC. So, you know what? I call a suspect on this because, again, the government wants to make sure that you're using the high-ratio mortgages, and what does that mean? That means they're going to get extra dues. So they don't want people doing conventional, and this is one of the reasons why. Now, they think this is going to cool the market, but what's going to happen is they're actually going to have a bit of a run on the market because they can't implement it right away. So we could see a flurry of activity over the next 30 days. But if they do put this through, and it looks like it's going to happen, then everybody that's looking at qualifying with a conventional mortgage is going to have to qualify at a higher rate. Is it fair? No, not at all. But ultimately what they're trying to do is they're trying to push down the market so it can't run away. Now, I've been talking to a lot of leading experts, and they've been telling me flat out, look, this market is going to run its course. People are getting pretty tired of multiple offers, and we're pretty much getting through most of the buyers that have been waiting on the fences to buy. So why does the government get involved? Well, because they think it's their duty. Quite frankly, I think they should mind their own business. Ultimately, in the end, this is going to have an adverse effect in two ways. One, market's going to overheat, and then it's going to cool down. So it's up to you to figure out how you're going to qualify. But if you want to keep the stress test at the lower rate, you can always pay for your CMHC insured mortgage. I don't think this is a smart thing. And quite frankly, I think the government should step back, not get involved. But at this time, they're probably going to, stick their noses in as they always do. Anyways, that's this week's update. I just want to let everybody know what's going on. And don't forget, you can keep following me here. One other thing is that we do have our investment webinar coming up. It's the Simple Real Estate Investment Webinar coming up on April the 29th at 7 p.m. Go to simpleinvestor.com. You can register, and you'll see me about an hour and a half from the comfort of your own home, and I'm going to talk about everything to do with investment real estate. Anyways, thanks for tuning in. I'm Todd C. Slater, the Simple Investor.